So more weakness in stocks this past week, and that has many wondering, when will it all end? When is this crash, correction, whatever you want to call it, when will it be over? I've got an interesting perspective on that. I'll tell you what looks likely to happen and what to watch for next week. Plus, I'll do my analysis of the overall markets, give you a sense of where there's opportunity. And then I'm going to show you a trade on a stock that actually went up last week. There wasn't many of them that went up, but this one did very well. And I'll show you how to find this sort of thing and how to benefit from it. All right, that's all coming up in this week's Stockscores Market Minutes. So small caps have now suffered enough of a loss for it to be considered a correction. The large cap stocks, the S&P, the Nasdaq, they're holding up better, but they're still pretty weak. And it's hard to find anything worth buying because just generally everything is going lower. Now the energy sector is strong. And like I said, there are some stocks able to move up, and I'll talk more about one of those from this past week at the end of the video. For now, let's talk about this market. When do bottoms get made? Well, typically there's a few phases that the market goes through before it makes a bottom. And one of those is that the trend goes parabolic to the downside. Now, this is something that's a lot easier to understand when I show you, so I'll show you that on a chart in just a moment. We should also remember that September is historically the weakest month of the year in the market. It's a very common cycle, weakness in September, bottoming sometime September, October, and then moving up until May. There's a saying about it, go away in May, because in May the markets usually start their winter or their summer slowdown. So I'm expecting, if tradition holds, that the market will bottom out in a little bit. However, one thing I've learned is that what normally happens doesn't mean you should trade off of it. You have to take what might happen and then watch for signals from the market that it is happening. All right, so let's go into a chart here and just talk about what to watch for. So the way that markets typically bottom is they go parabolic away from the downward trend line. So if I draw a line here, let's draw this in blue, there's a downward trend line. When price runs away from it, it usually bounces back. It runs away, bounces back. And what we look for is a break of the trend line after it's bounced back and after it's made a rising bottom. So that was a buy point for the market back in October of 2022. Now let's look more recently in this year when we had that weakness in February and March. So there's the downward trend line in February and March. And it's very similar to what we have right now. We've also seen this parabolic move to the downside, which is what we have right now. And then it made a rising bottom and broke toward the end of March. Well, we don't have that part yet. We don't have the rising bottom. We don't have the break of the downward trend line. So that's what we need to watch for. I think that'll probably happen early in October, maybe mid-October even, because we need to bounce back in the next week or two, then move up, build a little rising bottom, and then break this downward trend line. So that's what you want to watch for. We're certainly not there yet. And let's do some analysis of the other market indexes and get a sense of whether that's likely to happen. So let's go back to the S&P chart. Here is the 3-year chart. And you can see that the upward trend there was broken. Then we've made a falling top and we broke down from a falling top this week. That's a negative. However, the other upward trend line, which is really the more important one, is about there, maybe more like that. So we could go down for a week or two, hit that trend line and bounce. And that is probably what's going to happen sometime in October. Hasn't happened yet. I don't want anyone to get too excited about it happening on Monday because it's probably not going to happen. It could. But here's the short-term chart, and you can see fairly emotional selling the last 3 days of the week last week. So we're getting, maybe a little oversold. Could try to make a little bounce, but until we actually break the downward trend line on that daily time frame, I would still be pretty cautious with stocks. Now here's the Nasdaq, and it again broke down from a falling top last week, but here's the upward trend line, and in this case it's not too far away before we find that support. So there's not a lot more downside. How about the small cap stocks? These are much more interest rate sensitive, That's why this group has really lagged the large cap, particularly large cap tech. Well, there's the upward trend line for the IWM, and we're right at support. So we could go through it early next week and then come back to close in the green. And if we did that, we would have a good signal that the market was ready to bounce and move higher towards this resistance level. So this market is looking still very weak, but it's at the point where it should make a bounce soon. How about Canadian stocks? T.XIU is the symbol. And you can see Canadian stocks really just stuck in this sideways range. Never had the upward trend that the large cap US stocks had. It's really lagged, but it's also not got as far to fall perhaps. Looking at the short-term version of this chart, you do see a pretty good sell-off this past week, but it's coming into support, should bounce back next week off of that support level. All right, let's move on to some commodities. How about gold, GLD? And you can see that on the long-term chart of GLD, the upward trend was broken a few months ago. We're now in a downward trend. It's not a sharp one, but I wouldn't be eager to be buying gold stocks right now. And if you look at the short term, it's very choppy. And that tells us that there's a good deal of uncertainty. When you get that choppy trading, that tells us that investors are uncertain. Now, here is one of the important charts to look at. That is the chart of oil. Here's the long-term time frame. We, of course, if you've been watching this video every week, you'll know that we went bullish on oil a couple of months ago, and it's been moving up since then. It's now in an upward trend. It should get up to those highs where we'll get some resistance. What about the short-term chart, 1 month time frame? You can see we had a little bit of a pullback towards the end of the week. Still in an upward trend. Hopefully it continues higher if you're long of oil stocks anyway. If you're putting gas in your car, of course you don't want that. But if we start to break down through this floor from falling tops, then maybe get a little bit more cautious on oil stocks. So keep an eye, close eye on that next week. All right, well, what about currencies? Let's take a look at the US dollar. In an upward trend on the weekly, in an upward trend on the intraday. So it is bullish there. GBTC is our chart for Bitcoin. Long-term chart is still in an upward trend, but it's really been sideways for the past couple of months, and I'm concerned that we may get a breakdown through this support zone. The reason I say that is looking at the 1 month chart, where we're looking at 2-hour candles, you can see that the upward trend line was broken on Thursday, and that points to it likely moving lower, and that could threaten that long-term upward trend line on the weekly chart. Now, what about interest rates? I like to use TBT to give me a good graphical representation of interest rates. This is the inverse of the bond market. So the bond market went down this week, which made interest rates go up. Why did that happen? Because Jerome Powell, although they didn't raise rates, they said they didn't foresee a reason to lower rates anytime soon. So the market then says, okay, well, rates aren't going down maybe until the end of 2024. And that had effect on the bond market. Bond market drops. The real interest rate, as driven by Treasury bond market, went up, and that's why stocks fell. Now, there's not a whole lot more that interest rates are likely to go up before they hit resistance. And so I do think that we could have all of these things come together in the next couple of weeks. Interest rates top out in the bond market. The stock market bottoms out at support. We get the market bouncing back, and then perhaps we start a little bit more strength into the end of the year. All right, so let's just take a look at my ratings then. So you can see bearish on US large cap and NASDAQ stocks. Small cap, bearish, but in the short term or the long term, I'm actually neutral just because of where support is. Canadian stocks, neutral on both time frames. Gold, neutral short term, bearish long term. Oil and the US dollar looks bullish on both time frames. The oil starting to show some signs of weakness in the short term, so be watchful of that. Bitcoin, short-term neutral, long-term neutral, interest rates bullish on both time frames, meaning interest rates are in an upward trend. All right, well, I told you that there was a stock that last week made some good gains despite the market weakness. And let's talk about that now and how you find that. It's not really a day trade, more of a swing trade. This one started to move on Monday, and it triggered the old action candle that we've talked about. Well, last week it was the topic of our video, which was, is this the best indicator ever? I encourage you to go watch that video on the Stockscores YouTube channel. So CYBN broke out of this sideways trading range here, and it made the action candle. That action candle told us that the buyers were coming in aggressively. Strong volume, strong price action. And when that happens from a market that was boring before, it tells us something's going on. And the stock then went into a very good upward trend. Now this is a real penny stock, trading at 40 cents at the start of the week. It hit almost 60 at the end of the week. So nice gains, but it's very liquid, very actively traded. And that means it's quite easy to move in and out of it without a lot of slippage. And because it's a low price stock, small cap, micro cap stock, it can move regardless of what the market's doing, because these stocks aren't correlated to interest rates or what the economy's doing. It's all about something specific to the company. We call these alpha stocks. And they do tend to be lower priced, not always, but tend to be that way. And it's a good place to play when the market is weak, is you go find the alpha stocks. And those are driven by that abnormal activity. And again, go watch last week's video if you didn't catch it on how that works. All right, so not a stock I would buy now, to hold if you bought it with us on Active Live last week on Monday. Still a hold for those of you that are in it, but I would sell if it breaks this upward trend line, especially from a falling top. So if Monday morning it starts to go down through that upward trend line, then it's time to take your money and run. All right, well, that has been this week's video. Let me know what you think. Do you think the stock market's going to bottom in the next week or two, say before the end of September? Or is it going to be worse than that? Are we going to get more weakness? I'd love to hear your thoughts. Hope you've enjoyed this week's video, and trade well.